Every age has its wise men. In the world of money and decision-making, Charles T. Munger stands as one of the greatest. He was not a man who spoke often, but when he did, his words carried the weight of experience, reason, and humor. Unlike many who chased wealth for the sake of luxury, Munger chased understanding. He believed that wisdom, honesty, and lifelong learning were the true treasures of life. Poor Charlie's Almanack is more than a book about investing. It is a collection of timeless lessons on how to think better, how to avoid foolishness, and how to live with integrity. The style of the book is similar to Benjamin Franklin's Almanack, filled with wit, sharp insights, and practical advice. Each chapter reflects not only his financial genius, but also his human wisdom. From psychology to philosophy, from business to ethics, Munger's thoughts guide us toward a life that is both successful and meaningful. As we begin this journey, we first explore the man himself. To understand the wisdom, we must know the life behind it. So let us step into Part 1, a portrait of Charles T. Munger, where we see how his wit and wisdom were forged through both hardship and triumph. Part 1. A portrait of Charles T. Munger. Before we dive into Munger's ideas, we must first understand the man behind them. Wisdom never comes in isolation. It grows out of a person's struggles, experiences, and choices. Munger's life was filled with both hardship and success. He faced painful losses, yet he also built one of the greatest investment partnerships in history. He lived with humor, courage, and discipline. His story is proof that character shapes destiny. In this part, we look at Munger's journey as a man of wit and wisdom, and then at the unique approach he developed toward life, learning, and decision-making. These two chapters together give us the foundation to understand why his philosophy is so powerful. Let us begin with Chapter 1. The story of a life filled with wit and wisdom. Chapter 1. A life of wit and wisdom. To understand Charlie Munger, we must first see the story of his life. It is not the story of someone who was handed success. It is the story of a man who faced deep struggles, yet chose discipline, humor, and wisdom as his guiding stars. Charlie Munger was born in Omaha, Nebraska in 1924. He grew up in a modest family that valued education and hard work. As a boy, he worked at Buffett & Son, the grocery store owned by Warren Buffett's grandfather. Even then, his sharp mind and quiet determination set him apart. He did not chase popularity. He chased understanding. His early years were shaped by curiosity and a hunger for learning. Munger attended the University of Michigan, but his education was interrupted by World War II. He joined the Army Air Corps, where he trained as a meteorologist. This experience gave him a lifelong respect for science, evidence, and preparation. After the war, he studied at Harvard Law School without even having a college degree. Through discipline and brilliance, he graduated near the top of his class. Yet life was not smooth. Munger married young, and the marriage ended in divorce. He also suffered one of the deepest pains a parent can endure. His young son Teddy died of leukemia. The emotional weight was crushing, but Munger did not collapse. He rebuilt his life with resilience. He carried his grief with dignity and turned his energy toward growth and service. As a lawyer in California, Munger did well, but he quickly realized that law was not his true calling. He saw that while lawyers earned good money, they rarely built great wealth. Munger wanted freedom, not just a salary, so he shifted toward business and investing. This choice changed his destiny. In the 1960s, he met Warren Buffett. This partnership became legendary. Munger's sharp mind and wide-ranging knowledge impressed Buffett. Where Buffett was cautious, Munger was bold. Where Buffett focused on bargains, Munger taught him to focus on quality. He urged Buffett to buy great businesses at fair prices rather than cheap businesses with poor futures. This one shift turned Berkshire Hathaway from a struggling textile mill into one of the most successful companies in the world. But Munger was not only an investor, he was a thinker. He lived with humor that cut through nonsense. When others complicated things, he simplified them. When others chased fads, he focused on timeless truths. He liked to say, "All I want to know is where I'm going to die, so I'll never go there." This was Munger's wit. Behind the humor lay a deep philosophy of avoiding stupidity rather than chasing brilliance. Munger's life teaches us that wisdom is not about being flawless. It is about how we respond to pain, loss, and challenges. He did not let tragedy define him. Instead, he used it to sharpen his clarity. His story reminds us that resilience, curiosity, and integrity are greater treasures than luck. Even in his old age, Munger kept reading, learning, and thinking. He said that a day without learning was a wasted day. His sharpness, humor, and kindness made him admired by people far beyond the world of finance. He lived proof that true wealth lies not just in money, but in wisdom and character. This first chapter is the portrait of Munger's journey, from a young boy in Omaha to a wise elder shaping the minds of future generations. Now that we have seen the man and his story, we are ready to enter his mind. In the next chapter, we explore the unique approach that Munger built toward life, learning, and decision-making. It is here that his philosophy begins to shine. Chapter 2. The Munger Approach to Life, Learning, and Decision-Making. Charlie Munger's life experiences shaped a unique philosophy. He believed that the quality of our decisions defines the quality of our lives, and to make better decisions, we must train the mind, sharpen judgment, and avoid the traps of foolishness. At the heart of Munger's approach was lifelong learning. He once said, "Go to bed smarter than you woke up." This simple habit, practiced every day, builds a lifetime of wisdom. Munger read constantly. Books on science, history, psychology, mathematics, and philosophy filled his days. He believed that the mind is like a toolbox. The more tools you have, the more problems you can solve. This became his famous idea of a latticework of mental models. Mental models are ways of understanding reality. Physics teaches us about cause and effect. Biology explains systems and evolution. Psychology reveals the hidden forces of human behavior. Economics shows incentives and trade-offs. When you combine insights from many disciplines, you see the world more clearly. Munger believed that most mistakes come from narrow thinking. If you rely on only one discipline, you miss the bigger picture. Munger also believed in patience. He often said that doing nothing is sometimes the best decision. In investing and in life, opportunities do not come every day. The trick is to wait for the right pitch. He compared it to baseball. In normal baseball, you must swing even at difficult pitches. But in investing, you can stand at the plate and wait for the perfect ball. Patience allows you to strike only when conditions are in your favor. Another principle was discipline. Munger believed that emotions are the enemy of good judgment. Fear and greed drive people to make foolish choices. By staying rational and calm, you can avoid being swept away by crowd behavior. This is why Munger studied psychology so deeply. He wanted to understand how people misjudge situations, so he could avoid the same errors. Munger also practiced inversion. Instead of only asking, "What should I do to succeed?" he asked, "What should I avoid to fail?" This mental trick is powerful. It shifts focus from chasing brilliance to avoiding stupidity. For example, instead of asking, "How do I become happy?" you can ask, "What makes people unhappy?" and then avoid those habits. This mindset protected Munger from many costly mistakes. Ethics and honesty were also central to his approach. He believed that trust is a long-term asset. A reputation built on integrity creates opportunities that money alone cannot buy. Munger warned that dishonesty might bring short-term gain, but it destroys relationships, credibility, and peace of mind. His rule was simple: play long-term games with long-term people. Munger's approach was not about being extraordinary. It was about building habits that compound over time. Read daily. Think rationally. Stay within your circle of competence. Avoid envy, resentment, and self-pity. Be patient when others are restless. Say no to things that waste your focus. These small disciplines, practiced over a lifetime, create extraordinary results. This chapter shows us the foundation of Munger's philosophy. A blend of curiosity, rationality, patience, and integrity. It explains why he became not just a successful investor, but also a respected thinker. With this understanding of his approach, we are ready to step into the deeper parts of his philosophy. In the next section, Part 2, we explore the pillars of Munger's wisdom. We begin with the idea of elementary worldly wisdom, where he explains why connecting ideas across disciplines is the key to sound judgment. Part 2, the Munger philosophy. Now that we have seen Charlie Munger's life and the habits that shaped his mind, it is time to explore the heart of his philosophy. Munger was not just an investor. He was a collector of ideas, a builder of mental models, and a critic of human folly. His philosophy is both practical and timeless. It teaches us how to see the world clearly, how to resist our own weaknesses, and how to make decisions that stand the test of time. In this part, we will uncover the key pillars of his thinking. We begin with his idea of elementary worldly wisdom, where he explains why the big ideas from many disciplines must be connected. From there, we move into his powerful analysis of human misjudgment, a guide to the hidden traps of the mind. Then we learn how he applied these principles in stock picking, in defining one's circle of competence, and in his belief that avoiding stupidity is often more important than chasing brilliance. This section is where the philosophy of Charlie Munger comes alive. It is not about theories that stay in books. It is about practical tools for living, investing, and thinking with clarity. So let us step forward into Chapter 3 and discover why Munger called worldly wisdom the foundation of all sound judgment. Chapter 3, Elementary Worldly Wisdom. Charlie Munger believed that the human mind is a powerful tool, but only if it is trained with the right models. He often said that people who try to solve every problem with only one way of thinking are like a man with only a hammer. For such a person, every problem looks like a nail. This narrow view leads to mistakes, wasted opportunities, and in some cases, disasters. Instead, Munger suggested what he called a latticework of mental models. A latticework is like a web or a net where many points connect with each other. In thinking, this means using the best ideas from many different fields. He argued that if you only know one subject deeply, you will be blind in most situations. But if you know the key concepts from physics, biology, economics, psychology, history, mathematics, and even literature, you can use them together to solve real-life problems in a more accurate way. For example, an investor may know finance very well, but without understanding human psychology, he may not realize why people panic in the stock market. Without knowledge of mathematics, he may misjudge risk. Without history, he may forget that markets often repeat cycles of boom and crash. Munger's method was to learn the important models from all fields, remember them, and use them together when making decisions. This approach does not mean you must become a specialist in everything. Munger did not suggest mastering advanced physics or deep psychology. What he meant was to learn the big ideas, the ones that explain a lot with very little. For example, the concept of compound interest from mathematics, the idea of incentives from psychology and economics, the principle of feedback loops from engineering and biology. These are tools you can carry everywhere and use again and again. He also stressed that using multiple models creates something like a safety net. If you see a problem from one angle, you might miss the truth. But if you see it from 5 or 10 angles, you are less likely to fall into error. This is why Munger described his system as worldly wisdom. It is not wisdom limited to one subject, but wisdom connected to the world as a whole. Charlie's way of thinking also demanded humility. He often reminded people that human brains have built-in flaws. We are biased, emotional, and easily fooled by our own desires. Knowing this, Munger argued, we must be extra careful. By applying different models and cross-checking our own ideas, we can reduce the impact of our natural mistakes. One of his famous lines was that it is better to avoid stupidity than to chase brilliance. What he meant was that many people fail not because they are not smart, but because they fall into predictable traps. By understanding common errors, by knowing how psychology tricks us, and by always asking questions, one can avoid big failures. And avoiding big failures often leads to long-term success. The core of his philosophy was lifelong learning. Munger never stopped reading. Even in his later years, he read many hours a day. He once said that people who keep learning daily will enjoy an advantage that compounds over time, much like money that earns interest. This habit of continuous learning fed his latticework of models and made his mind sharper every year. So, Chapter 3 teaches us that intelligence is not about being a genius in one narrow subject. It is about collecting the most powerful ideas from everywhere and combining them to form better judgments. It is about knowing enough to see the world clearly and to act with reason, not impulse. As we move to the next chapter, we will see how Munger applied this wide, practical thinking to the world of business and investing. The principles of worldly wisdom were not just abstract ideas. They were tools that shaped real strategies, real partnerships, and real wealth. Chapter 4: The Psychology of Human Misjudgment. Even the smartest people make mistakes. Charlie Munger believed that most of these mistakes are not caused by lack of knowledge. They are caused by the mind itself. Our brains are powerful, but they have predictable flaws. Munger studied psychology deeply so that he and others could avoid the traps of human misjudgment. He identified many patterns of error. One is incentive-caused bias. People act in ways that benefit themselves, even when it is harmful to others. Another is social proof. We follow the crowd, even when the crowd is wrong. Then there is confirmation bias. We look for evidence that supports what we already believe and ignore evidence that contradicts it. Munger also warned about overreaction and underreaction. Humans exaggerate rare events and ignore important trends. Loss aversion is another trap. We feel pain from losing something more intensely than joy from gaining the same thing. This can make people act irrationally in investments and relationships. He explained psychological denial. People avoid unpleasant truths because they are uncomfortable. This leads to ignoring problems until they become disasters. Munger called this the law of least effort. Our brain wants shortcuts, but shortcuts often lead to mistakes. Another frequent trap is authority bias. We obey people simply because they seem powerful or knowledgeable. Even intelligent people are fooled by authority if they do not check the facts themselves. Then there is envy, resentment, and the tendency to imitate others blindly. All these biases push humans to make the same mistakes again and again. Munger said that understanding these patterns is more important than learning new facts. Knowledge alone cannot protect you. You must also train your mind to recognize its own weaknesses. He advised keeping a checklist of psychological tendencies to watch for, especially in business and investing decisions. This study of misjudgment is not only for investors. It applies to everyday life. Why do partnerships fail? Why do people lose money on scams? Why do organizations collapse? Almost always, human misjudgment is involved. Munger often said, if you avoid these psychological traps, you will automatically gain an advantage over most people. It is not about being smarter than others. It is about being aware of your own mind. Being aware allows you to act rationally when others act irrationally. This chapter prepares us for the next step. Once we understand human misjudgment, we can see why Munger approached investing and business in a way that avoids common mistakes. The next chapter, The Art of Stock Picking, shows how he applied his understanding of psychology, incentives, and risk to choose investments wisely. Chapter 5, The Art of Stock Picking. Charlie Munger believed that investing is simple, but not easy. It is simple because the rules are clear. It is not easy because human nature constantly interferes. To succeed, an investor must combine discipline, patience, and understanding of both businesses and human psychology. Munger often said that a stock is not just a ticker symbol. It represents a real business. When you buy a stock, you are buying part of a company. You become a partial owner. This mindset changes everything. You stop thinking about short-term price movements. You start thinking about long-term value, management quality, and competitive advantage. He emphasized quality over quantity. Most people diversify too much, spreading their money across many mediocre businesses. Munger preferred focus investing. Invest deeply in a few companies you truly understand and trust. This requires patience and courage. You must wait for the right opportunity and act decisively when it comes. Valuation is important, but Munger taught that it is secondary to quality. A great company bought at a fair price beats a mediocre company bought at a bargain. He admired businesses with strong brands, loyal customers, and efficient operations. These qualities create a durable advantage that survives market cycles. Munger also applied his understanding of psychology. He knew that fear and greed drive markets. When everyone is panic selling, it is often the best time to buy. When everyone is buying blindly, it is often the best time to step back. Investing is as much about temperament as it is about intelligence. He warned against overconfidence. Investors often think they know more than they do. They chase hot tips or follow the crowd. Munger said, "Stay within your circle of competence. Invest in what you understand. Ignore everything else." He also valued rational patience. Sometimes the best action is inaction. Waiting for the right pitch, like in baseball, allows compounding to work its magic. Compounding is not just about money, it is about knowledge, relationships, and experience. Small advantages, repeated over time, lead to extraordinary results. Munger believed that learning from mistakes is critical. Every failed investment teaches something about human misjudgment, market behavior, or the business itself. By keeping a record of past errors, you avoid repeating them. He called this method the feedback loop of learning. This chapter shows that stock picking is more than numbers. It is a disciplined approach that combines knowledge, psychology, patience, and focus. It is a reflection of Munger's broader philosophy of clear thinking and worldly wisdom. With this understanding, we are ready to explore the next critical idea. Chapter 6, The Circle of Competence, explains why knowing the limits of your knowledge is one of the most powerful tools for success in investing and in life. Chapter 6, The Circle of Competence. Charlie Munger believed that one of the most important keys to success is knowing what you know, and, more importantly, knowing what you do not know. He called this principle the circle of competence. Within this circle, you can act confidently. Outside it, even brilliance may fail. Munger often said, "It is not necessary to know everything about everything. You only need to know enough about your circle." This mindset protects you from taking unnecessary risks and falling into traps caused by ignorance. It also guides you to focus your energy on areas where your understanding is strong. The circle is not fixed. It can expand over time with learning and experience. But it should never be ignored. Investors, business people, and decision makers often make mistakes by straying into fields they do not understand. Munger's advice is simple. Stay within your competence, and only gradually expand it as your knowledge grows. He explained that knowing your limits is a sign of intelligence, not weakness. It requires humility to admit what you do not know. Yet, this humility allows you to make safer, wiser decisions. People who overestimate their competence often suffer large, avoidable losses. The circle of competence also shapes decision-making. When faced with opportunities, Munger asks whether they fall inside his circle. If yes, he acts. If no, he waits, learns, or walks away. This disciplined approach filters out the distractions and dangerous risks that most people chase blindly. Munger gave practical examples. He invested in businesses whose products, markets, and economics he understood. He avoided industries that seemed appealing, but were outside his circle. Even if others made easy money there, he stayed away. This restraint, he argued, compounds over time. Avoiding mistakes often produces better results than chasing risky gains. The principle applies beyond investing. In life, you should recognize your strengths and weaknesses. Focus on areas where you can make a meaningful contribution. Avoid activities where your understanding is shallow. This reduces stress, avoids unnecessary conflict, and increases the likelihood of success. Another aspect of the circle is clarity. Munger advised writing down what you understand and what you do not. This clarifies boundaries, guides learning, and improves judgment. It turns abstract knowledge into practical action. The circle of competence is closely linked to patience and rationality. When opportunities arise inside your circle, act decisively. When opportunities are outside, resist temptation. Most people fail not because they are wrong, but because they overstep their knowledge. This chapter teaches a powerful lesson. Success is not about knowing everything. It is about knowing what you know well and acting wisely within that domain. By respecting your circle of competence, you reduce risk and increase the odds of long-term success. With this understanding, we are ready to consider another essential principle. Chapter 7. The importance of avoiding stupidity shows why it is often more critical to avoid mistakes than to pursue brilliance. Chapter 7. The importance of avoiding stupidity. Charlie Munger often said that, in life and investing, avoiding stupidity is more important than seeking brilliance. Most people think success comes from clever moves, but Munger argued that the opposite is true. Avoiding errors compounds over time, while mistakes have lasting consequences. Stupidity, he explained, is not about being unintelligent. Even highly intelligent people make foolish decisions when they ignore basic principles. It is about violating simple rules of reality. This could be underestimating risk, letting emotions drive decisions, or ignoring incentives and consequences. Munger emphasized that human beings are prone to predictable mistakes. We overreact to fear, chase short-term gains, follow the crowd, and underestimate probability. By recognizing these tendencies, we can build a mental checklist to prevent errors. Avoiding stupidity is like staying out of traffic accidents. It is far better to prevent crashes than to rely on quick reflexes after one occurs. He also warned against envy, resentment, and ego. People often make poor choices to impress others or outdo someone else. This type of behavior is costly. Avoiding such emotional pitfalls leads to better decisions and greater stability. Another key point is simplicity. Munger believed that complexity increases the chance of mistakes. A simple plan, executed consistently, is less likely to fail than a complex strategy with many moving parts. This principle applies to investing, business, and personal life. He encouraged adopting a long-term perspective. Short-term thinking often leads to foolish choices. Chasing instant gratification or quick profits increases risk. By focusing on lasting results, we naturally avoid many errors. Munger also highlighted the value of saying no. Most mistakes happen when people act without careful thought. Learning to decline opportunities outside your circle of competence or that violate basic principles reduces exposure to loss. Saying no is a discipline that compounds advantages over time. He called this approach, first, do no harm. The idea is not to be brilliant, but to avoid catastrophic mistakes. In investing, avoiding a single large loss can preserve wealth more than 100 small gains. In life, avoiding poor habits and toxic relationships leads to stability and growth. This principle of avoiding stupidity ties together all previous lessons. Worldly wisdom, mental models, patience, discipline, and self-awareness all help prevent errors. By combining these elements, Munger built a framework that not only achieves success, but also protects it. With this understanding, we are ready to move from theory to application. Part 3 begins with the Munger approach to business and life. Here, we see how these principles guide real business decisions, investing strategies, partnerships, and ethical living. The next chapter, Chapter 8, Business Principles, explores the foundation of Munger's practical approach to building successful businesses. Part 3. The Munger approach to business and life. Now that we understand Charlie Munger's philosophy of thinking, decision-making, and avoiding mistakes, it is time to see how he applied these principles to the real world. Part 3 explores the Munger approach to business, investing, partnerships, and life itself. It is where ideas turn into action, and theory becomes practical wisdom. Munger believed that success in business and life depends on the same principles: discipline, patience, rationality, and ethics. A clear understanding of human nature, combined with a circle of competence and avoidance of stupidity, creates a foundation for long-term achievement. This section shows how he transformed knowledge into practical strategies. We will begin with business principles, where Munger explains what makes a company successful beyond mere numbers. From there, we explore investing principles, the legendary Berkshire Hathaway partnership, and the importance of ethics and integrity in all dealings. Finally, we will see how he views philanthropy and a life well lived, connecting wealth, wisdom, and purpose. This part demonstrates that Munger's lessons are not just for investors. They are for anyone who wants to navigate the complexities of life and business with clarity and success. Let us now step into Chapter 8, Business Principles, and discover the core strategies that guided Munger in building sustainable and successful businesses. Chapter 8, Business Principles. Charlie Munger believed that successful businesses share common principles that go beyond numbers and spreadsheets. To him, a great business is not only profitable, but also understandable, durable, and well managed. These qualities make it resilient over time and capable of compounding value. Munger emphasized the importance of competitive advantage. He often called it an economic moat. A moat protects a company from competitors and allows it to maintain long-term profits. This could be a strong brand, unique technology, customer loyalty, or regulatory barriers. The wider the moat, the safer the business, and the more reliable its returns. Another key principle is simplicity. Munger favored businesses that are easy to understand. If you cannot explain how a company makes money in a few sentences, it is likely too complex to predict. Complexity increases risk and reduces the ability to make rational decisions. He advised focusing on businesses where the economics are clear and predictable. Management quality is also essential. A company may have a strong product, but without skilled and honest leadership, it will struggle. Munger preferred managers who are competent, rational, and ethical. He valued honesty even more than brilliance because integrity builds long-term stability and trust. Financial strength is another pillar. A strong balance sheet with limited debt gives a business the ability to survive downturns. Munger looked for companies that can endure recessions, competition, and unexpected shocks without jeopardizing their core value. He often said, "It is not just what a company earns in good times, but how it survives bad times that matters." Munger also stressed that culture matters. A positive culture encourages discipline, learning, and ethical behavior. It reduces internal friction and allows employees to focus on creating value. Culture is often invisible, but it drives long-term results more than short-term tactics. He applied the same principles to partnerships. Whether in investing or business ventures, Munger sought relationships where both parties share values, integrity, and long-term goals. Trust is a multiplier in business. It allows for smoother operations, faster decision-making, and enduring success. Finally, Munger emphasized patience. Successful businesses are rarely built overnight. They grow steadily through consistent performance, compounding profits, and careful reinvestment. Short-term fluctuations may tempt investors or managers, but disciplined patience produces lasting results. This chapter shows that business success is not about luck or clever tricks. It is about predictable qualities: competitive advantage, simplicity, skilled management, financial strength, ethical culture, and patience. These principles guide not only investors, but anyone seeking to understand how businesses endure and thrive. With this foundation, we are ready to move to Chapter 9, Investing Principles, where Munger applies these business concepts to selecting investments, managing risk, and creating long-term wealth. Chapter 9, Investing Principles. Charlie Munger believed that investing is not about luck, speculation, or following the crowd. It is about rational thinking, discipline, and applying timeless principles consistently. His approach combines understanding businesses, psychology, and risk management. The first principle is value investing. Munger, along with Warren Buffett, looked for companies whose intrinsic value exceeded their market price. Intrinsic value is the true worth of a business, considering its earnings, growth potential, and durability. By buying below intrinsic value, an investor builds a margin of safety. This protects against mistakes, misjudgments, and unexpected market downturns. The second principle is patience. Markets fluctuate daily, but long-term wealth grows steadily through compounding. Munger often compared investing to waiting for the right pitch in baseball. Do not swing at every opportunity. Wait for situations where the odds are strongly in your favor. Patience allows compounding to work its magic and reduces unnecessary risk. He also emphasized staying within one's circle of competence. Invest only in businesses you understand. This principle reduces errors caused by overconfidence or ignorance. It also allows you to evaluate opportunities more accurately and predict future performance. Risk management is another core principle. Munger believed that avoiding permanent loss of capital is more important than chasing high returns. Investors should consider worst-case scenarios, think in probabilities, and prepare for uncertainty. A single large loss can undo years of gains. By focusing on safety first, Munger ensures that wealth grows steadily and sustainably. Another key principle is understanding human behavior. Markets are driven by greed, fear, and social pressure. By studying psychology, Munger learned to avoid panic selling, herd behavior, and overreaction. Contrarian thinking, buying when others panic and selling when others overvalue, is central to his strategy. Munger also valued concentration over diversification. A few great investments, chosen carefully, outperform a large number of mediocre ones. This requires courage, research, and confidence in one's knowledge. It is not about being reckless, but about making fewer, higher quality bets. Finally, ethics and integrity guide all investing decisions. Munger never compromised honesty for short-term gain. Trust, reputation, and ethical behavior compound like money, creating long-term advantages. They attract opportunities, partners, and talent, while avoiding costly conflicts. This chapter teaches that successful investing is a blend of discipline, patience, psychology, ethics, and focus. It is not about guessing market trends or following tips. It is about understanding businesses, thinking clearly, and acting rationally over the long term. With these principles in mind, we are ready to explore Chapter 10, the Berkshire Hathaway Partnership, where Munger and Buffett applied these lessons to build one of the most successful investment organizations in history. Chapter 10, the Berkshire Hathaway Partnership. Charlie Munger's partnership with Warren Buffett is one of the most famous in business history. It exemplifies how principles, discipline, and shared values create extraordinary results. The Berkshire Hathaway story is not just about investing, it is about applying wisdom consistently over decades. Munger and Buffett started small. They pooled money from friends and family to invest using the principles of value investing. From the beginning, they focused on high-quality businesses, long-term growth, and rational decision-making. They avoided speculation, short-term trends, and businesses they did not understand. A critical factor in their success was alignment of incentives. They created a partnership where both managers and investors shared the same goals. This reduced conflicts, encouraged disciplined decisions, and built trust. Munger often said that properly aligned incentives prevent human misjudgment from destroying value. Patience was central. Berkshire Hathaway did not try to get rich quickly. They waited for the right opportunities, invested in companies with durable competitive advantages, and held them for decades. This allowed compounding to work its magic and reduced transaction costs and mistakes. Munger also applied the concept of avoiding stupidity. He refused investments that seemed risky, overly complex, or morally questionable. By avoiding major errors, the partnership preserved capital and grew steadily. This principle of first, do no harm, became a cornerstone of their success. Another key factor was the use of a circle of competence. They invested in industries and businesses they understood deeply. If an opportunity lay outside their knowledge, they passed, even if it appeared profitable. This restraint kept them safe from many mistakes that trap less disciplined investors. Ethics and integrity guided every decision. Berkshire Hathaway built a reputation for honesty, reliability, and transparency. This reputation attracted excellent managers, loyal shareholders, and long-term partnerships. Munger believed that trust compounds just like money. It creates value that lasts for decades. The partnership also benefited from Munger's focus on mental models. They approached every investment by analyzing it from multiple perspectives: economics, psychology, history, and mathematics. This latticework of models allowed them to see opportunities others missed and avoid traps others fell into. The Berkshire Hathaway story is a testament to disciplined investing, clear thinking, patience, ethics, and alignment of incentives. It shows that extraordinary success is rarely the result of brilliance alone. It comes from applying timeless principles consistently, avoiding major mistakes, and thinking long-term. With this understanding of practical investing and partnership success, we move next to Chapter 11, The Importance of Ethics and Integrity, where Munger explains why character is central to lasting achievement in business and life. Chapter 11, The Importance of Ethics and Integrity. Charlie Munger believed that character is the foundation of long-term success. Intelligence and skill are important, but without ethics and integrity, they can lead to failure or disaster. Munger often said that reputation is like compound interest. It grows slowly, but can be destroyed instantly. Protecting it is more valuable than short-term profits. Integrity guides decision-making. When a person or organization acts honestly and fairly, it builds trust. Trust creates partnerships, attracts talent, and opens opportunities. Dishonesty, on the other hand, may give short-term gain, but leads to long-term losses, legal issues, and damaged relationships. Munger emphasized avoiding conflicts of interest. Many mistakes in business and investing happen because personal incentives clash with ethical responsibilities. By prioritizing fairness and transparency, one can reduce risk and make better choices. He often said that it is better to lose a deal than to compromise your integrity. Ethics also influence how companies operate. Munger looked for businesses led by managers who are not only capable, but also principled. These companies make decisions that are sustainable, build lasting customer loyalty, and avoid legal or moral pitfalls. In this way, ethics is not just a moral requirement, but a competitive advantage. Another aspect is self-discipline. Ethical behavior requires resisting temptations and shortcuts. It requires thinking long-term and understanding that the cost of unethical actions often outweighs immediate rewards. This discipline compounds over time, just like wealth or knowledge. Munger also emphasized consistency. It is not enough to act ethically occasionally. Sustained integrity creates predictability and reliability. This makes relationships stronger and creates a positive ripple effect across business and personal life. He taught that ethical failures are often rooted in psychological weaknesses. Greed, envy, overconfidence, and desire for status can cloud judgment. By understanding these tendencies and applying self-awareness, one can act with honesty, even under pressure. Munger's own life reflected these principles. His partnerships, investments, and philanthropic efforts all demonstrated that long-term success depends on aligning intelligence with ethics. He believed that acting with integrity is not only the right thing to do, but also the smart thing to do. This chapter shows that ethics and integrity are not abstract ideals. They are practical tools for decision-making, risk management, and long-term success. With these lessons in mind, we are ready to explore Chapter 12, Philanthropy and a Life Well Lived, where Munger connects wealth, wisdom, and purpose to create a meaningful legacy. Chapter 12, Philanthropy and a Life Well Lived. Charlie Munger believed that wealth is a tool, not the ultimate goal. Money alone does not define a meaningful life. True fulfillment comes from using your resources, knowledge, and influence to create lasting value for others. Philanthropy is one of the clearest ways to achieve this. Munger's approach to giving was practical and focused on impact. He did not believe in random donations or publicity-driven acts. Instead, he looked for areas where his contribution could produce measurable and long-term benefits. Education, healthcare, and scientific research were often priorities because they multiply the effect of each gift. He also emphasized intellectual generosity. Sharing knowledge, mentoring others, and helping people make better decisions is a form of giving that costs little but creates enormous value. Munger himself spent decades teaching, writing, and giving advice freely to students, investors, and colleagues. He believed that ideas compound like money. The right knowledge shared with the right person at the right time can change lives. A life well lived, Munger said, balances personal satisfaction with service to others. It requires continuous learning, disciplined decision-making, and ethical conduct. It also requires reflection and humility, understanding that no matter how much you achieve, life is bigger than your own desires. He valued simplicity and focus in both life and giving. Do not overcomplicate decisions. Identify where you can have the most impact and act there. This principle applies to investments, business, and philanthropy alike. Munger also stressed the importance of long-term thinking. Wealth and influence are tools that can compound over decades. Use them wisely, and they can create benefits that far outlast your lifetime. Avoid short-term recognition or ego-driven acts, as they rarely produce lasting value. Ethics and integrity remain central. Giving with honesty, transparency, and respect ensures that the impact is real and sustainable. This approach builds trust and encourages others to act responsibly as well. Philanthropy, according to Munger, is not just about money. It is about applying wisdom, time, and influence to improve the world. It is a way to live purposefully, leaving behind a legacy that reflects knowledge, integrity, and care for others. This chapter completes Part 3, showing how Munger's philosophy of thinking, ethics, patience, and competence extends beyond business and investing. It demonstrates that a meaningful life combines success, wisdom, and generosity. Next, Part 4, Talks and Speeches, brings his ideas to life in his own words, giving insight into how he communicated these lessons to students, investors, and the world. Part 4, Talks and Speeches. Part 4 brings Charlie Munger's philosophy to life through his own words. These talks and speeches reveal how he communicated complex ideas simply, practically, and memorably. They are not just lectures. They are lessons in thinking, decision-making, ethics, and life. In this section, we will explore 4 key speeches and lectures. Each of them provides a window into Munger's mind and demonstrates how his principles can be applied in real-world scenarios. The first is the Harvard School Commencement speech, where he shares advice for young graduates stepping into the world. Next is the USC Business School speech, offering lessons on investing, business, and discipline. Then we examine the Worldly Wisdom speech, highlighting how a latticework of mental models shapes rational thinking. Finally, the Psychology of Human Misjudgment lecture shows Munger's insights into predictable errors in human behavior. These talks are practical, memorable, and full of wisdom. They show how lifelong learning, ethics, patience, and rationality can guide both professional success and personal fulfillment. Through these speeches, Munger not only teaches principles, but demonstrates how to think clearly and act effectively. Let us begin with Chapter 13, the Harvard School Commencement speech, where Munger shares timeless lessons for young adults about education, decision-making, and creating a meaningful life. Chapter 13, Harvard School Commencement speech. Charlie Munger delivered his Harvard commencement speech with clarity, wisdom, and practical advice. He spoke not just to inspire, but to guide young graduates entering a complex and uncertain world. One key lesson he emphasized was the value of lifelong learning. Education does not stop at graduation. Munger encouraged graduates to read widely, think critically, and continuously expand their knowledge. He said that building a latticework of mental models from multiple disciplines allows better understanding of life, business, and human behavior. He also stressed the importance of rational thinking. Graduates were advised to make decisions based on evidence and careful reasoning, not on emotion, popularity, or short-term trends. Munger reminded them that human misjudgment is predictable, and learning to recognize these patterns is a major advantage in life. Ethics and integrity were central to his message. He warned that success without honesty is fragile and dangerous. A reputation for fairness, trustworthiness, and ethical behavior compounds over a lifetime, opening doors and avoiding pitfalls that intelligence alone cannot. Patience was another theme. Munger encouraged graduates to think long-term, whether in careers, relationships, or financial decisions. He compared life to investing. Consistent, rational decisions, compounded over time, lead to extraordinary outcomes. Short-term gains are fleeting. Long-term wisdom endures. He also addressed the importance of avoiding envy and foolish competition. Graduates should focus on their own strengths, circle of competence, and unique contributions rather than trying to imitate others. Comparisons and jealousy cloud judgment and lead to mistakes. Another key point was resilience. Life is unpredictable, and setbacks are inevitable. Munger urged graduates to maintain discipline, adaptability, and a problem-solving mindset. Failures are opportunities to learn and refine judgment. Finally, he encouraged graduates to think about their legacy. Wealth, success, and knowledge are tools, not goals. The most meaningful life combines ethical behavior, intellectual growth, and contributions to society. By applying these principles, graduates can create lives of value and purpose. This speech demonstrates Munger's ability to translate complex concepts into practical guidance. It flows naturally into Chapter 14, the USC Business School speech, where Munger applies similar lessons specifically to business, investing, and strategic decision-making. Chapter 14, USC Business School speech. Charlie Munger delivered his USC Business School speech with a focus on practical wisdom for business, investing, and rational decision-making. Unlike a traditional lecture, he blended psychology, economics, and ethics to show how students could succeed in complex environments. One of his central lessons was the importance of multidisciplinary thinking. Munger emphasized that business leaders and investors benefit from learning across multiple fields: psychology, history, mathematics, and science. He called this a lattice work of mental models. Understanding concepts from different disciplines allows you to see connections others miss and make better decisions. He also stressed rationality and avoiding common human mistakes. Greed, envy, social proof, and overconfidence often lead business people astray. Munger urged students to be aware of these biases and to build decision-making processes that minimize errors. Checklists, structured analysis, and disciplined evaluation are tools to overcome cognitive traps. Ethics and integrity were another focus. Munger pointed out that in business, reputation and trust are compounding assets. Short-term gains from unethical behavior are fleeting, but long-term success depends on honesty, fairness, and reliability. He advised students to prioritize integrity in every deal, partnership, and decision. Patience and focus were highlighted as keys to investing and business growth. Munger warned against chasing trends, fads, or hot stocks. Instead, concentrate on areas within your circle of competence. Wait for opportunities where the odds are strongly in your favor, and act decisively when they appear. This approach reduces risk and maximizes the probability of success. Munger also shared lessons on risk management. Avoiding large permanent losses is more important than achieving short-term gains. Prudent allocation of resources, diversification within competence, and careful evaluation of incentives are strategies to protect capital and preserve optionality. Another important lesson was continuous learning and adaptation. Markets, businesses, and human behavior evolve over time. Those who stop learning fall behind. Munger encouraged curiosity, reading, and observing the world carefully to maintain an advantage. Finally, he advised students to think long-term. Decisions in business and life should consider the impact decades ahead, not just the next quarter or year. Compounding works not only in money, but in knowledge, reputation, and relationships. This speech ties together Munger's principles of ethics, rationality, patience, and multidisciplinary thinking. It naturally leads to Chapter 15, the Worldly Wisdom speech, which further explores how these ideas create clarity in life and business, and how they can be applied to solve real-world problems effectively. Chapter 15, Worldly Wisdom speech. In his Worldly Wisdom speech, Charlie Munger emphasized practical knowledge and rational decision-making as keys to navigating life and business. He called it worldly wisdom because it is about understanding how the real world works, not just theory. One of Munger's main lessons was that success comes from combining multiple mental models. He urged students to study psychology, mathematics, economics, physics, and history to form a latticework of understanding. By seeing problems through different lenses, one can avoid simple mistakes and recognize opportunities others overlook. He stressed the importance of rationality. People often make decisions based on emotion, peer pressure, or short-term incentives. Munger encouraged evaluating situations logically, considering probabilities, and acting in alignment with long-term goals. This approach reduces mistakes and improves outcomes in investing, business, and personal life. Another theme was the avoidance of stupidity. Munger reminded listeners that avoiding errors often matters more than seeking brilliance. He advised building habits, checklists, and mental frameworks to prevent predictable misjudgments. By preventing major mistakes, individuals protect resources, reputation, and future opportunities. Ethics and integrity also featured prominently. Munger noted that trust compounds like money. People with high ethical standards attract opportunities, partners, and talent, while those who compromise morals face long-term costs. Integrity provides both practical and psychological advantages. He emphasized patience and long-term thinking. Opportunities should be evaluated not for immediate rewards, but for their enduring value. Munger encouraged acting decisively when conditions are favorable and waiting when they are not. This mindset allows compounding to work its magic in both money and knowledge. Munger also discussed the importance of learning from history and human behavior. By understanding patterns in markets, politics, and psychology, one can predict outcomes more reliably. Ignoring these lessons increases vulnerability to avoidable mistakes. Practical decision-making was central. He urged students to focus on what they can control, understand incentives, and recognize the limitations of knowledge. The combination of ethical behavior, mental models, rationality, and focus equips individuals to navigate uncertainty successfully. This speech captures the essence of Munger's philosophy. Combine knowledge across disciplines, act ethically, think long-term, avoid mistakes, and use rationality to guide choices. It naturally leads to Chapter 16, The Psychology of Human Misjudgment lecture, which examines in detail the predictable errors in human behavior that Munger identified over decades. Chapter 16, Psychology of Human Misjudgment lecture. Charlie Munger devoted an entire lecture to the predictable ways humans make mistakes. He called it the psychology of human misjudgment. Understanding these patterns is crucial because most failures in life, business, and investing result from predictable errors rather than bad luck. Munger identified dozens of psychological tendencies that lead to poor decisions. One is reward and punishment misalignment. People respond strongly to incentives, but incentives often drive irrational behavior. For example, a bonus tied only to short-term results may encourage risky or unethical actions. Another tendency is social proof. Humans are influenced by the behavior of others. Following the crowd can lead to mistakes, whether in investing, business, or daily life. Munger emphasized thinking independently and questioning popular trends. Consistency and commitment bias is another pitfall. Once people commit publicly to a belief or action, they tend to follow through even when evidence changes. This leads to sunk cost errors and resistance to new information. Munger also highlighted the influence of envy and jealousy. These emotions distort judgment and can lead to harmful decisions, like sabotaging others or overextending oneself to compete. Over-optimism and overconfidence are powerful traps. Even skilled individuals overestimate their abilities or the likelihood of success. Recognizing limits, staying within a circle of competence, and avoiding arrogance helps prevent costly mistakes. Munger discussed other biases such as availability bias, liking and disliking tendencies, authority bias, and the tendency to oversimplify complex problems. Each of these has predictable consequences if ignored. By understanding them, one can design processes and checklists to minimize their impact. He emphasized that these psychological tendencies are universal. Even the smartest people fall into the same traps repeatedly. Awareness and deliberate countermeasures are required to reduce errors and make rational choices. Munger's lecture teaches that wisdom is not just knowledge, but the ability to avoid predictable errors. By studying human misjudgment, one can improve investing, business decisions, and personal life. It is a guide for building resilience, clarity, and rational thinking in an unpredictable world. With this understanding, we move to Part 5, Final Thoughts. Here, Munger summarizes his key lessons, offers a checklist for wise decision-making, and reflects on the legacy of knowledge, ethics, and rationality. Part 5. Final Thoughts. Part 5 brings together the lifetime of wisdom, principles, and insights shared by Charlie Munger. After exploring his philosophy, business strategies, investing principles, ethics, philanthropy, and speeches, this final section distills his lessons into practical guidance for everyday life. Munger's approach combines knowledge, rationality, ethics, patience, and self-awareness. He believed that wisdom is cumulative, built over decades of learning, observing, and reflecting. Part 5 emphasizes applying these lessons systematically, avoiding common mistakes, and creating a life of value and purpose. In this section, we first encounter the Munger checklist. It is a practical tool designed to help individuals make better decisions by avoiding predictable errors and focusing on what truly matters. Next, we reflect on a legacy of wisdom, where Munger shares insights about leaving behind knowledge, integrity, and contributions that endure beyond one's lifetime. This final part ties all the previous lessons together. It shows how to combine mental models, ethical behavior, patience, and rationality into a coherent framework for decision-making, investing, and living wisely. Let us now move to Chapter 17, the Munger Checklist, where these principles are condensed into actionable steps to guide rational thought and sound judgment. Chapter 17, the Munger Checklist. Charlie Munger created a checklist to help guide decision-making and reduce errors caused by predictable human misjudgment. The checklist is a practical tool that applies to investing, business, and life. It is based on decades of observation, study, and experience. The first principle is understanding incentives. Munger emphasized analyzing how rewards and punishments drive behavior. Misaligned incentives can lead to poor decisions or unethical actions. By examining incentives carefully, one can anticipate outcomes and avoid traps. The second principle is to know your circle of competence. Focus on areas where you have expertise and avoid situations you do not understand. Operating within your knowledge limits reduces mistakes and improves decision quality. Third, Munger stresses the importance of avoiding bias. Human tendencies like overconfidence, envy, social proof, and consistency bias distort judgment. By recognizing these tendencies, one can design processes to mitigate their effects. Fourth, patience and long-term thinking are critical. Munger warns against chasing short-term trends or quick profits. Waiting for the right opportunities and letting outcomes compound over time produces superior results. Fifth, simplicity matters. Avoid overcomplicated strategies or investments. If you cannot explain how something works clearly, it is likely too complex and risky. Sixth, ethics and integrity guide all decisions. Trust compounds like money, creating long-term advantages in relationships, partnerships, and reputation. Avoid shortcuts that compromise moral standards, even for short-term gain. Seventh, checklists and structured thinking reduce errors. Munger encourages using a system to evaluate options, assess risks, and compare alternatives logically. This disciplined approach helps prevent impulsive or emotionally driven decisions. Eighth, always learn from mistakes. Study errors, both your own and others, to improve judgment over time. Avoid repeating predictable misjudgments. The Munger checklist is not a magic formula. It is a framework for disciplined thinking, ethical action, and rational evaluation. By following it consistently, one can navigate complex situations, protect against costly mistakes, and make better long-term decisions. With this practical tool in mind, we are ready to explore Chapter 18, A Legacy of Wisdom, where Munger reflects on the enduring principles, knowledge, and ethical insights that define a life well lived. Chapter 18, A Legacy of Wisdom. Charlie Munger's life and teachings leave a legacy that extends far beyond business and investing. He demonstrates how rational thinking, ethical conduct, patience, and lifelong learning combine to create enduring value in all aspects of life. Munger believed that knowledge compounds like money. Decades of learning, observation, and reflection accumulate to create a deep understanding of how the world works. This knowledge, when combined with ethical action and disciplined decision-making, produces extraordinary results. A key part of his legacy is the emphasis on mental models. By studying multiple disciplines, individuals can approach problems from different angles and make better decisions. Munger's lattice work of models, from psychology and economics to history and mathematics, helps explain why things happen and how to respond wisely. Ethics and integrity are central to the legacy. Munger consistently showed that trust, honesty, and moral behavior are not just ideals, but practical tools for success. Reputation compounds over a lifetime and opens doors that intelligence or skill alone cannot. He demonstrated that acting with integrity produces both personal fulfillment and lasting professional advantage. Patience and long-term thinking also define Munger's legacy. He emphasizes that short-term rewards are often fleeting, while decisions guided by rational analysis and delayed gratification produce enduring benefits. Compounding works in knowledge, relationships, reputation, and finances when guided by discipline and foresight. Munger also leaves a legacy of philanthropy and intellectual generosity. He encourages using wealth, influence, and knowledge to improve society, educate others, and solve real problems. This focus on giving back, mentoring, and sharing wisdom ensures that his principles benefit not just himself, but generations to come. Another cornerstone of his legacy is the focus on avoiding stupidity. Munger consistently teaches that avoiding major errors is more important than achieving brilliance. By understanding human misjudgment and designing systems to minimize errors, individuals can preserve capital, relationships, and opportunities. Finally, his life exemplifies continuous learning and curiosity. Munger shows that true wisdom is never complete. It grows through relentless study, observation, and reflection. By combining learning with ethical action, rationality, and long-term thinking, anyone can create a meaningful, impactful, and enduring life. A legacy of wisdom is not measured solely by wealth or achievements. It is measured by the knowledge shared, ethical standards maintained, decisions improved, and lives positively impacted. Charlie Munger's teachings guide us to think clearly, act ethically, and live with purpose, leaving a lasting mark on the world. With this, Poor Charlie's Almanack concludes, offering timeless lessons for investors, business leaders, and anyone seeking a life of rational thinking, ethical action, and meaningful achievement. If you enjoyed this deep dive into Charlie Munger's wisdom, don't forget to subscribe to our channel. By subscribing, you'll get more insightful summaries, life-changing lessons, and practical guidance from the world's greatest thinkers. Hit the bell icon so you never miss an update, and join us on this journey of learning, growth, and worldly wisdom.